Catching up on some missed earnings, today we're taking a look at Enphase Energy, ticker symbol ENPH. This one's valuation has come down along with its stock price, and from a technical perspective is coming down to a critical level of support. We'll see if this one can be a good reversal play. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. We are on the road to 500 subscribers and it would mean a lot. Now, before jumping into Enphase's earnings, I do want to talk about what they do as a company. In case you guys don't know, Enphase is a global energy technology company and is the world's leading supplier of microinverter-based solar storage systems. They deliver smart, easy-to-use solutions that connect solar generation, storage, and energy management onto one intelligent platform. And so this is from their investor presentation back in July. They essentially have their flagship Enphase microinverter, which converts DC to AC at each panel, which is far more efficient than your traditional solar energy system that's based on solar panels and your string inverter. And so at its core, Enphase is essentially a semiconductor company combined with a software company that operates in many different verticals, including solar, but not just solar, also storage, grid, generator, and even EV, as they make EV chargers. Now, jumping into Enphase's earnings report, which they reported at the end of July. This was for Q2 2023, and they posted better than expected Q2 results. However, the stock did see a big decline in the after hours once they reported. That was largely due to a miss in guidance, which we'll get to shortly. So Q2 net income coming in at $157 million, or an EPS of $1.09. That was up roughly 100% from a year ago, closer to $76.9 million and 54 cents per share of EPS. Revenues jumping 34% year over year, which came in at $711 million compared to $530 million same time last year. Now, guidance is what I believe drove shares down sharply, as Enphase guided Q3 sales coming in the range of $555 to $600 million. Analysts were closer to $750 million, and so that is a huge miss on that Q3 guide, as well as adjusted gross margins expected to be between 42 and 45%. And so when you miss your guide by roughly $150 million on that high end and closer to $200 million on that low end, yeah, that will certainly see your shares decline. Now, the CEO on the conference call did say that this decline in sales for Q3 is expected to be due to a balance in sell-through channel, and so that dramatic decrease in revenue next quarter is mainly due to the fact that they've sold through too much in advance and have to reduce channel inventory to balance that out. And so if nothing dramatic happens in that subsequent Q4, guidance for that upcoming Q4 after this Q3 should be back in line. Enphase also announced a new $1 billion share repurchase program. That's after they completed their existing share repurchase program, which we'll get into in just a moment. So here we see in this most recent quarter, Enphase repurchased roughly $200 million worth of common stock at an average price of closer to $160 per share. Now this stock is down to $125, and so Enphase certainly did overpay at that time for their shares. That completed their $500 million share repurchase program, and due to the fact that they added another $1 billion share repurchase program, that will expire sometime in 2026. Now, just to put this in perspective, this is a close to $17 billion company as of now, and so $1 billion of share repurchase is quite significant. Moving on to the financials for Enphase, we start off with the balance sheet, as they put that right at the top of their financial statements, frankly because it looks quite good. And so cash and cash equivalents nearly $300 million. That did tick down this is on a 6-month basis. That did tick down. However, marketable securities ticked up about the same amount, and so all in all, their current cash relatively in line. Inventory you see did tick up roughly $16 million from 6 months ago. Total current assets sitting at $2.5 billion, and total assets sitting at roughly $3.5 billion. In terms of liabilities, they don't have a lot of accounts payable. They do have roughly $100 million in short-term debt, coming in at $750 million of current liabilities. They do have roughly $1.2 billion of long-term debt, and so total liabilities coming at $2.5 billion. All things considered, the balance sheet is quite good over at Enphase. Moving on to the statement of income, we see net revenues that was up roughly 34% on a year-over-year basis, up to $711 million. So from a fundamental perspective, this most recent quarter was quite strong. They saw revenues growing 34%. We saw that net income line nearly double, up to $157 million. In terms of cost of revenues, they were able to control those as they didn't grow as fast as revenue, and so your gross profit jumped up to $323 million compared to $219 million same time last year. In terms of operating expenses, they did add on a ton of R&D, which is not necessarily a bad thing in the event of a growing company like Enphase. Sales and marketing up a little bit, G&A ticked up fractionally. You have your total operating expenses coming in at $153 million. So you take your $323 million of gross profit, subtract off $153 million of operating expenses, and you come down to an income from operations close to $170 million. Same time last year, this was just at $94 million. Now, in this upcoming Q3, they did guide revenues somewhere close to, let's say, $600 million on their high end. Certainly, that will affect their gross profit, as I don't think Enphase will be able to cut their cost of revenues significantly. Operating expenses will largely stay in line, and so their total income from operations will go down substantially in this upcoming Q3. I don't see them turning negative because fundamentally Enphase is still quite strong, and so, but we have to consider the fact that in that Q3, income from operations and subsequently net income will look very shriveled up, and that's largely due to the decline in that top line. Paying some interest expenses, we come down to a net income number of that $157 million. Last year it was at $77 million. So very strong growth on that bottom line for Enphase. We see that while they are doing a share repurchase and they purchased roughly $200 million worth of common stock, year over year their share count has actually increased, and so they are still diluting shareholders, just not at the same pace as they used to. Moving on to the statement of cash flow, this is a 6-month ended June 30th picture, so we see 6 months of net income right here at $304 million. We get to add back a few things such as depreciation, amortization. We get to add back a lot of stock-based compensation, get to add back accounts payable, some warranty, and some deferred revenues. We have operating cash flows for 6 months coming in at $515 million, so very strong operating cash flow. So even with that loss in revenue coming in Q3, I see this company having strong cash flow on that operating basis. Now, they did purchase significant property and equipment over the last 6 months. You see that has nearly tripled compared to 6 months in 2022. They did purchase a ton of marketable securities in these last 6 months as well, and used up roughly $430 million in investing activities. This is their $200 million repurchase of common stock. And all things considered, over the last 6 months, Enphase has burned through roughly $200 million worth of cash in their business. Moving on to the technical charts for Enphase. Now, this is what's really interesting for this stock. It's coming down to this critical level in this downtrending channel. Once a high-flying stock has seen its share price slide over the past year, as shares have been down roughly 63% from its all-time highs. Now, it's been locked in this descending channel since really the start of this year and has made its way to the top of the channel every so often. However, it's locked in that lower lows and lower highs pattern. Now, it is coming near this long-term support line of roughly $115 that acted as resistance back in 2020 and then acted as support a few times back in May of 2021 and Feb of 2022. And so certainly I do think Enphase can see support at these levels and can see a reversal at least to the top end of this channel at these levels. Now, certainly if you're looking to swing trade Enphase or looking to pick up Enphase at these levels, I would, and I can't stress this enough, I would set a very tight stop loss. I would say close to this $110 level because if Enphase does break through this level of support, there's not a whole lot of volume and support underneath 115, and so it can come down to really $90 in a hurry. And so if you are looking to swing trade or trade Enphase at these levels, I think there can be a good swing trading opportunity, as you have roughly 40% upside within this channel and roughly a 10% downside if you set that stop loss closer to $110 per share. While the fundamentals of Enphase are still very strong, from a technical perspective, this has lost all momentum, and considering their guidance revision downwards, I think analysts will have to, and they clearly have, revised their earnings estimates for these upcoming quarters. As you see, 27 analysts, all of them have revised earnings down over the last month. You see growth has absolutely come down and is not the same as it used to be over at Enphase. As you see, 2023 fiscal year EPS growth to be just at 9% and top line growth to be roughly at 14%. So certainly, as the stock price has come down, its valuation has also come down, making it more reasonable in my opinion. And while Enphase is still a fundamentally strong stock and can possibly be a good long-term play, I would manage downside risk in a stock like this by setting stop losses and paying attention to the technicals in a stock like this. That was Enphase Energy. Let me know your thoughts in the comments below. Do you think Enphase is a buy, sell, or hold at $124? As always, thanks so much for listening, and I'll catch you guys in the next video.